and there are a lot of them. You can see what is the combined YOY change of the CPI among GDP. I want to see real GDP by income or real GDP by industry. So which is contributing to the entire GDP the most. Now this is YOY change, but if I set it as value, it gives you the absolute value that contributes to GDP. Say, oh, I think service industry is contributing to Hong Kong GDP the most. And among service, it will be finance and insurance, of course, is contributing to Hong Kong GDP. And the second is public administration and import and exporting. How about US? I want to see what is the United States real GDP by industry. Then it gives you, I think we cannot change this. Yes, contribution percent. Oh, change. Just change. I think we don't have the latest data available at the moment, but domestic products. Great. So now this shows the contribution for each of the businesses, and you can see that still farm business is contributing a lot to US compared to other industries, and among households, household is contributing more than non-profit institutions, and state and local government is also contributing a lot. So this is how you can do some quick analysis on the country level. And if you are not sure about where to navigate among here, then you can click on search and insert the keyword. For example, I want to see the India CPI. Then India CPI, and there are a lot of them. You can see what is the combined YOY change of the CPI. Hit enter. And this give you, this is from Central Statistics Office in India, and the latest number is from August 2020, 6.69%. So yeah, you can always search for the economic indicators if you are not sure about anything. And let me move on to economic forecast. This might be a little interesting if you are interested how the economic will move. So for example, the economics forecast, it give you the real GDP for the yellow letters, meaning that these are the reported ones, the already existing numbers. But 2020 from and onwards, it's only showing the estimates. So you can see people say for 2020 real GDP, it will be -4%. I want to see which investment banks are forecasting that way. So if you click on the -4, you can see which contributors have been contributed for that number. So Kennesaw State University contributed as -4.5%, so a little bit worse than the consensus. And ABN AMRO, Barclays, or some major banks also actively contribute here as well. So the Citigroup say one expected -3.6%, or JP Morgan expecting -3.6%, so they were a little bit more optimistic. And also apart from the GDP or any other data here, you can also see the probability of recession. This is also estimates from different contributors. So there are, say, KTB Securities from Korea has been estimated 25% recession. Guerrilla Capital Management expected 100% recession, and so did Landesbank Baden. Also with National Federation of Independent Business, yeah. So this is also a lot of contributions on how the economics will go, or what they think about the economics or current economics or the next year, etc. All of these are tickers, meaning that you can look up the historical price, the chart, or the description of all of each of the numbers here. So for example, I want to see information about probability of recession. Then let's drag and drop into the top, or you can right click, or Now the ticker has been loaded. You see RPUS1Y. This is the probability of recession ticker. And I want to say, what was the probability of recession that was estimated when the COVID hit the United States the worst? So say, I have a theory that analysts would have expected the economy would go bad as 100% sure when the COVID says as in April or March or April when the started lockdown. So I want to see how they has been changed historically. So what I'm going to do is to go on HP, the historical page that I showed you initially about the Apple stock price. Now that does not only give you the stock price, but also for indices or GDP or any other tickers, it gives you historical data. So now you can see that actually 35% has been a huge increase from September. So up until September 10th, people were expecting the probability of recession coming as 100%. So they were very sure that United States is going under recession. Then from September 11th, they start to be a little more optimistic, and then it climbed up to 50%, and now 35%. So you can see that this has been a huge improvement. I want to see them at one go in graph. So you can see from April 13th, when the United States started lockdown, it has been stayed in 100% for a very long time. You can see how amazing this result is because it has never been 100% for a long history of time. So I'm seeing the maximum range of the chart. So it starts to give you the data from 2008, and people only thought that there is a 100% chance recession only in, let me move this a bit. I want to see this. Yeah, they expected the recession to come as sure as 100% only when it was in a worst financial crisis in 2008 November. But it was only one day. So people thought it might be 100% just for one day, and then they start to see the recovery. And as you can see, that it has been decreased a lot. So this is the people's estimate. But now it has been 100% for several months, and I want to actually I want to compare this with an actual GDP then. So I click on edit chart and US GDP, and then see QOQ or YY, or yeah, maybe QOQ would be good. Yep. So you can see that the GDP has been pretty much stable. When it reached 100% from here, it gave you a huge decline on GDP as QOQ percent, as small as -8%. So you can see that these are clearly in an inverse relationship. Why are they missing? Yeah, inverse relationship, but yeah, but you can see that when it reached 100% for COVID, then the GDP went as small as -30%. So this is how you can compare the estimates and the reality. And I think this estimate has been pretty much reflecting the reality pretty well. And now moving on to the equity market and the bond market, but I think I will go for equity market first and maybe give you a little bit of break before we move on to bond market, because bond market could be a little more contents heavy than equity or any of the topics that I mentioned before. So let me move on to equity market. And also one more thing to note is that my colleague Ingrid is going to run a session on Friday more about equity analysis. So if you're interested in equity analysis in depth, then please feel free to sign up for that. And my colleague is happy to help. She's an equity team and I'm an FI team, so it's more of a little bit of split. So for equity market, let's say let's start from one company analysis. I took Tesla as an example. So I want to see first news on Tesla and see if there has been anything new coming up. Tesla, Elon Musk on allegations of him stealing Tesla from Abraham. Okay, so not pretty positive. Co-founder ambitious resign. Okay, not much of a news. For Quest report Q3 profit. Martin did not found Tesla, and yeah, I don't think any big news is coming up apart from a little one negative news here. So someone is thinking that yeah, allegations on stealing the Tesla. So now we want to see if this has been affected Tesla's stock price. So what I'm going to do is to run P or graph chart to see if anything happened. I don't think that affected that much because it slightly increased here. But I want to understand what happened here and here because it has been the biggest, like highest price ever and lowest price in among this upward momentum. So what you can do is to click on news and select the data point, and it gives you what kind of news was happening during the state of this specific market movement. You can see that Tesla had a stock split. Usually stock split would affect the company in a good way, so that could explain some of the upward momentum and highest price ever. How about this date? September 8th, and you can see there was a maybe, yeah, Wall Street. So it might be something about the finance industry that affected Tesla negatively. And there's another downward event here, and maybe it's about the battery day that they had. So they were hosting an external event, and maybe that wasn't very successful. So yeah, this is how you can see the news data within a chart as well. And since we saw that there was a stock split in October 31st, I want to see more about the information. So what I'm going to do is to go to corporate actions, or in short CACS, and see if anything happened for Tesla. You can see that indeed they had a stock split in August 31st, and they were giving 5 shares for 1 share. So this is how you can check fact checking the data on the news. And for analyzing a stock, you can not only analyze this single stock, so this one very stock, but you can also check their peers. What you can do is go to relative valuation, or in short RV, and it's showing the peers of this company. For example, since this is a motor company, a lot of the peers would be the motor automobile manufacturing, for example, Toyota, Volkswagen, Audi, or Daimler. These kind of companies would be considered Tesla's peer, and it shows the stock price or how the price has been changed, P ratio, return on equity, etc. You can see the P ratio, Tesla doesn't have any peer. It's 930, and none of them is as close. And the stock price or market cap is also almost equivalent to the ones combining Toyota and Volkswagen and Audi. So you can see that Tesla is one of the top performers or so expensive stocks in the market at the moment. And yeah, this is how you can toggle between different tabs. For example, comparable sheets or markets will give you the market data, the price data, or fundamentals difference of each of the peers. Some of the functions that I would like to introduce is merger and acquisition and IPO. So a lot of corporate finance class students would be interested in looking into this. So merger and acquisition is, in short, very straightforward MA. In MA, you can see what kind of deals, mergers and acquisitions is happening at the market right now. And the current one that's announced today are for Link Administration Holdings, Guangzhou Greenland Real Estate Development, Mumbai International Airport. Oh, this is selling. Yeah. So yeah, these deals are active at the moment, just completed or pending or just proposed. So it's having the most recent data. But if you want to see more in more specific sector, specific market, say if you are doing a corporate finance class and you need to investigate what are the recent merger and acquisition happening in India or past 3 years, then you can click on advanced search and select this region, maybe Asia Pacific, India, and let's say you also have another criteria of a sector, because we are having way too many deals now. I want to set the date range as last 3 months, last 12 months, announced last 12 months. 2000 still. How about the sector? So your sector to cover is a technology sector, let's say, and this we have 518 deals. They are announced last 12 months in India under technology sector. Now click on results, and you'll see deal list. These are the deals that are announced in the last 12 months, and some of them already happened and some of them are still in the pending. And a lot of the times you can also see the TV EBITDA as well. So some of them has completed. If you click on Think and Learn Private Limited, then you'll see what are the deal information. For example, the transaction value was, maybe this is not having too much information. This. Okay, never mind. So transaction value is 15,000 million, and their price has been here, and the timeline was here, and the requested the proposal information is also attached here. So if you click on it, you can see what is the proposal and the deal details as well. And same thing happens, same information you can see from IPO page as well. We can also click on advanced search and sort them by sector or market, and then see their deal list or who was the advisor of that IPO deal, etc. So yeah, I'd say this will be particularly more useful for corporate finance or IBD career, if you're interested in IBD career. So I think I have covered enough for equity markets so far, and it's almost 11:20. So what I'm going to do is to pause here for now, so that you can think about this, think about what we covered for past 15 minutes, and let me resume from bond market analysis in 3 minutes. Take a quick break and get back to the room in 3 minutes. You don't have to leave the room. Yeah, I think it's good to have a break because we are covering a lot of functions. So, yep, and also please let me know if you have any questions. Access to the notes analysis, and I see a hello everyone, welcome back, and let me continue from the bond market analysis, and I see a question from regarding the access to the notes. I think I can share this to William if that's not an issue from William's end. But one more thing is that I will share you some tips about at the very end of the session, which will include how to find search functions like this. So yeah, you don't have to worry too much about finding the function itself. So thank you for the question. And the next question I got is how to obtain the historical price or financial information of a securities in the market by one time. So what you can do, but one more thing is that hello everyone, welcome back. And let me continue from the bond market analysis. And I see a question from regarding the access to the notes. I think I can share this to William if that's not an issue from William's end. But one more thing is that I will share you some tips about at the very end of the session, which will include how to find such functions like this. So yeah, you don't have to worry too much about finding the function itself. So thank you for the question. And the next question I got is how to obtain the historical price or financial information of multiple securities or all securities in the market by one time. So what you can do is to use Excel in that case. So Bloomberg is integrated to Excel as well. And what you can access it by, say, this is the file that I exported just now. But when you open an Excel in a Bloomberg installed PC, so the PC that you have in a library, and click on Bloomberg tab and Spreadsheet Builder, and you can select multiple securities. For example, currently I have Apple, but you can add some other securities, say Disney or Netflix. So save 3 securities now and select last price and volume is selected already here because I have an existing template, but you can search for, say, last price and click into this and it'll be added over here, and volume the same. Next, and choose the date from start date to end date, and then next and finish. Now you're having historical data for 3 different securities, Apple, Disney, and Netflix. So you can have the price and the volume or whichever information you would like to see. But please aware that a lot of cases, since Bloomberg Terminal is shared term in universities, you might not have a quota to download the data anymore. It's because a lot of students are using at the same time, and if they export this to Excel, they might consume the monthly or daily limit of the data that they can download to Excel. So sometimes if you are not able to see the data in Excel, even though you have the formula, it might be the case that you have your terminal has exceeded the limit, which in that case you would need to wait for a month. So the next, it's always resetted every first of the month. So say if you're seeing an error here and if you think that it's a data issue, then you might need to wait until November 1st for today. Or all securities in the market, I wouldn't recommend to have all securities in the market historically, because that doesn't really have any meaning of the data, because if you don't have any specific market focus, then the output itself, it doesn't really have any meaning for analysis. But if you have multiple securities at the same time and you want to analyze them at the same time with say several different items, you can go to worksheet or W and enter and create a new worksheet. So this works like an Excel embedded within Terminal, and this is not affected by the data that I mentioned previously. So choose whichever template you want to use, create, and you can add several securities, say Apple, or keep using Apple, but maybe use something else. How about Tencent? HSBC. So now I'm adding only the tickers of the company, and the stock price or daily change or PE ratio estimates or some new events are automatically linked to the ticker, so you can monitor them all at once without any formula. And the next question I got, how can I obtain the historical price? Sorry, I think this one, by backtesting. What do you mean by backtesting the securities? Oh, for backtesting the strategy. Sure. Backtesting the strategy, I think this will be more covered on equity side, but let me quickly. So we have BT, or basic backtesting, BTST, is giving you how to backtest the securities, and this doesn't really need all the information of all stock market. You can just choose your universe, or say I want to show you a sample backtesting scenario. For example, you are backtesting with a weighted moving average, then yeah. So weighted moving average backtesting, you can enter the trades, and you can enter how many wins you had or how many losses you had in the P&L of the trade. So it doesn't necessarily mean that you need to gather all the basic information of the stock by yourself and then conduct the backtesting. You can just use our backtesting tool like BT or BTST to confirm the strategy. But if you're more interested, I think it'll be better covered on Friday session and equity session, because we allocate a full hour for equity analysis. You're welcome. And moving on to the bond analysis, a lot of times bond analysis users are categorized into two different sectors. Either they're looking at rates or credit. Rates users are those are the ones who are looking at the government bond yield, or the swap rates, or derivatives, or that kind of the rates that is not only for, say, I think it'll be better to explain credit first. So credit is about the corporate bond. For example, I mentioned that we have a corporate bond like this, tickers. But yeah, so the corporate bond is issued by corporate, so it bears credit risk, and the difference of the price might be affected by the sector that the company is in, or the credit risk of the company, the credit rating of the company, or the market movement at the time of the issuance, and many different variables. But for, say, if you're looking at the government bonds, then it doesn't really have any credit risk. We don't assume the U.S. government to go default unless it's an extreme situation. So in that case, we don't really have to take a look at credit risk for U.S. Say government bond. It's only about interest rates and how the curve is going to develop and moving forward. So those are the big differences. And let me start with government bond first, because it is a little more less functions than corporate bonds. But say government bonds, generic government rates, or government bonds, you can see, yeah, I think generic government bonds, or GGR, will give you this drop down, and the GGR page automatically completed. And if you click on United States, oh yes, how can I help? I think someone raised a hand. Please let me know if you have any question in the chat. I will first move on with the government bonds. Oh yeah, sure, no problem. So in government bonds, you're seeing the benchmarks. So this bond right here, the T is the ticker again, but in this case, the T is government ticker, the U.S. Treasury ticker, in short T. And 0 and 1/8. So this is the coupon, a very small coupon. And 0922 is 2022 September maturing bond, which we have 2 years from now. So this is the 2-year government benchmark, 3-year government benchmark, 5-year, 7-year, 10-year, 20 and 30. 20 and 30 are relatively new ones, but let's 10-year. is the most frequently used one. And you might have heard in the news 10-year government bond has been increased or decreased, has been record low or record high, and etc. So let me load up this bond and see how it has been really changed. So again, chart is a great place to just view the overall movement, and you can see that the government bond yield has been very, very low, meaning that the government bond price has been very high. So the bond price and yield is having an inverse relationship, and you can, if the yield is low, then you can think that the price has been very high. So yield has been changed slightly recently, but still, ever since March, the government yield has been very low. And you can see if I maximize this range, then you can see how low it is. Yeah, so the data started from 1962 and increased the bond yield, meaning that the government bond has been cheaper until in the peak of 1981, and ever since the government bond yield has been decreased, meaning that people are looking for government bond. Hence, the bond is going to go cheaper. There are some other variables in the play, but just for the nutshell, government bond is getting cheaper, meaning that people are government bond is getting more expensive, meaning that people are trying to buy it more, and which means that people are trying to go diversify their risk. So people think that government bond is the safest asset. So if they think the market is going volatile, then they have a tendency to put their money to the government bond, getting the bond, which makes the bond more expensive, which makes the yield much more lower. So now the yield is lowest in the record, meaning that people are trying to avoid the risk possible in the volatile time. So this is how you can interpret the government bond yield. And there are several other functions. You can see the government yield curve, or government, yeah, I think it would be nice to just show you the yield curve first. So yield curve, I think it might not be so familiar for some of the students, but you can think of yield curve as how much money how much is the rate if I deposit this money in each of the term. So again, U.S. Treasury is the most active and most secure one. So let me use U.S. Treasury as an example. This is Curve Finder, CRBF, and Bloomberg has a lot of different curves embedded in the system, not only for government curves, but we have credit curves as well. So we can think, say, I'm going to issue a bond that's having 5-year maturity. What is the average yield for, say, BBB rated bonds? That kind of analysis can be done in Bloomberg, but let me demonstrate you with U.S. Treasury curve first. So I loaded up U.S. Treasury curve and see the graph selected curves, and it will show you, yeah, this beautifully shaped upward sloping curve. Upward sloping curve means that if I am to invest in a government treasury bond for 1 year maturity, 1 month maturity. So if I invest this amount, a certain amount of money, say $1 million in a 1 month maturity, then I'm getting a 0.95% yield. But if I invest them in 30-year maturity, then I'm getting 2.84% yield. Meaning that there are a lot of difference between short-term rate and long-term rate, and long-term rate is way higher than short-term rate, meaning that your money will value certainly higher if you are investing in long-term, and also if you so people are expecting the economy would go better, because now is, since worse than ever. So people expect that the economy will go better. So I will require more yield, so more interest rate, if I invest in a longer term than a short term. So this is how you can interpret the curve. Say if I invest in 10-year, then I'm getting 2.8%, and 30-year I get 2.86%. So this is the difference between the 10-year investment and 30-year investment, and people think that 30-year investment will deserve more interest rates than 10-year. But this has not been the case for forever. I mean, economy has been gradually getting better for past few decades. So you might think that this is a normal shape, and this indeed is a normal shape of a yield curve. But right before COVID, say I want to see the 2020 February, the yield curve shape was slightly different. So yellow one is the current curve, but the green one is the February curve. And you can see that actually the short-term money was more more worth than midterm ones. So if you were to invest in a 3-year, that was not getting way too much interest rates than short-term ones. And also you can think that meaning that people are investing on a short-term. So if you are to invest in a short-term money, then you will require more rates because not much of the people are investing in the short term. So you can see that they were inverted curves as well, and only until a few months before today. So you can expect how the economy will go only from the yield curve as well. So this is how you can interpret the yield curve. And for more in-depth ones, I think it will be nice to learn more about the interest rates and the fixed income basics. And also we provide a comprehensive help page in CRVF as well, along with a lot of chartings and references. You can also export this to Excel and white papers as well. So moving on to the corporate bond side, because corporate bond will be a little more relatable to us because it is very closely linked with stocks. But the difference is that corporate bonds you can issue many times. For a common stock, we only have one common stock, unless they have like Class A, Class B, different classes. We only have one common stock, hence one common stock ticker. So for Apple, it's only Apple US equity. But for corporate bonds, it's not the case because you can issue as many bonds as possible within a range that you can have the financial stability. So then I'm not quite sure how many bonds that Disney has. So let's first load up the Disney company ticker, and then what you can run RELS, related securities, and see how many bonds they have. Related securities shows not only stocks and bonds issued, but on the left it gives you subsidiaries or related entity and etc. So these are the related companies that are Walt Disney has or is related to. For example, Pixar, Marvel, or TWDC, or Disney Enterprise, ABC, Fox, and etc. So these are the entities itself. But if I want to see their bonds, you can click on bonds and generic tickers and see their bonds issued by Walt Disney. Let me sort them by relevance. So relevance is giving you the most relevant tickers for this tickers. This is closely linked to how many users are looking at the same security, or how liquid this bond is traded in the market. And let me use this one, the Disney bond, 2.65% coupon, maturing in 2031, as an example. I'm going to load this up to the terminal command line. Now the ticker is loaded up. As I mentioned previously, it consists of 4 different parts: issuer, coupon, maturity, and then button. Now let's start from the description page, since description is the best place to start analyzing any sort of securities, and especially for bonds. Bonds description page is very integrated, and you can see what are the basic information, say coupon payment frequency, or what is the issue price, or day convention used, or how was the issue spread like. So for example, it was priced against treasury bonds that are maturing in 2030, and then adding, and you can see the bond ratings. Moody's A2, S&P A minus, Fitch A minus, and composite. So summing up all these three agencies, it's A minus. I want to see more about the credit rating because I believe that credit rating affects the bond price a lot. So what we can do is to go to CRPR, or it's short. This is short of credit rating profile. It's not. Load up CRPR. Yeah. So in short, in the credit rating profile give you all the ratings for each of the agencies. So Moody's, again, it was A2, S&P was A-, Fitch was A-, right? But apart from this, it gives you the long-term rating as well, or issuer rating. So this first one is for bond rating, but the second one, issuer rating. So it give you what is the credit rating of the company overall, apart from this specific bond. And if you click on each of the rating, it gives you the history of the bond rate change. 1996, when it first rated, it was A. It was deteriorating a little bit in 2001, and a little worse in 2002, and it stayed in BBB plus, and then moved back to A- from 2005, and ever since it has been around A. So you can see their credit rating change and how their outlook has been. But now that I have the credit ratings, so I had the information that I wanted, but I want to know more about the comparable analysis as we did with equity. So not only for the specific bond, but I want to see the comparable bonds for this bond, specific bond. So COMB, or comparable bonds, is giving you what are the other bonds that are considered as its comparable or peer. So for example, this Disney bond, we have Fox, or OMC, Omnicom Group. I believe I saw Oracle last time, but yeah. So these are the bonds that are considered as a peer of Disney's bond, and you can see their price and yield and what's the spread difference between their treasury and their current Z spread. Sorry, Z spread, so not treasury, and the range. So historically, within 6 months, their average has been here, and now it's here, and that kind of analysis can be done all at once in comparable bond analysis, COMB. If you're more interested in price and the yield relationship of the specific bond, you can take a look at yield and spread analysis page, or in short, YAS. YAS is you can think of this as a giant calculator embedded in terminal, and if you choose to say change the price or yield or spread, then entire thing will be recalculated. So you can do a little bit of scenario or simulation. Say if the bond current price is 108, but if you want price to be 105, then you can see that the yield and yield and spread is also changing significantly, and so did their credit spreads. So credit spreads are a credit risk matrix against the treasury. So it's giving what is the yield on top, added on top of treasury to measure the credit risk, and how risky this bond is compared to treasury, which is considered as risk-free. And on the top right, it's giving you the interest rate risks. So for example, modified duration and duration, DV01, convexity, and etc. So these information can be interpreted as what is the impact that this bond will get for the change of interest rates. And there are multiple tabs, but again, YAS is a very complex function. You can run F1 and then see the help page of YAS if you have any questions, or you can use help desk as well. There are a few more functions that I want to mention for fixed income. Next one is fixed income credit monitor, or in short, FICM. FICM is another monitoring function to see how the movement has been for bond market, but this one is for specifically credit market. So you can see that the energy sector has been decreasing its OAS, meaning that their interest rate, credit risk has been decreased a lot compared to communication sector. So you can monitor this overnight. And let me take a look at the spread chart. So in the spread chart, you can select which sector you want to see. Let's clear all out. And how about we compare the healthcare and technology and energy for the credit movement. So if we do YTD of this chart, then you can see a huge hike during the March and August lockdown, meaning that their credit risk has been highest ever since in this year, and then has been slowly recovering because it decreased a lot, and they have been recovering and then recovering. So now the credit risk is about the same as, not about the same, but around like 100 BP higher than previous pre-COVID, but you can still think that there has been a huge credit risk hike, and then it has been recovered. And lastly, for fixed income, we have a fixed income surge as well. So apart from doing the one security analysis of looking at their price, their yield, their credit rating, and their peers, we can also do a top-down analysis with a specific criteria. So SRCH, or fixed income search, is a good place to search for the bonds, and you can do a quick analysis with ask a question. So I want to see, say, how much green bonds has been issued since 2020. Then you can run green bonds and ask a question, and it'll be automatically completed like this. And I want to see green bonds issued in this year. How many of them? Oh yeah, there were 677 bonds that were issued this year. How about just green bonds in general, issued from the beginning of this bond database? So there are 2,690 bonds available in terminal that are green bonds, and I want to see how many green bonds are issued over time. So in results, you can go to matrix, it's the second tab. And yeah, you can see that this green icon on the second column, this is an indicator for green bonds. And since we are sorting all the green bonds now, all of them are in green at the moment. Taking a little time. Might take a little long time, so yeah, the expected screen you will see is the breakdown of the month or year issued and the number of bonds that are issued for each year. So you can see a great hike has been observed for past 1 or 2 years, and you see that the green bond interest has been increasing. Oh, great. Now let's go to metrics. Oh, might take another minute, but yeah, you get the idea. You can see the list of the green bonds, and in the metrics, you can aggregate them as if it's a pivot table in Excel. So great. So now you can see that the green bonds in 2008 has been only 4, and then 6, and then slightly gradually increasing. And you can see 2019 there has been 755 green bonds issued, record high. And so far, as of October 2020, there has been 677. So maybe by end of the year, it might be a little more than 2019. So you can see their green bonds issuance, or their sum of amount issued, and the actual amount can be available too. I think this is it for the bonds part as well. And since we only have 8 minutes left, let me quickly introduce you 2 most useful functions for navigating the functions itself. So this is not about the security information, but more about how to find functions in Bloomberg. First one is Bloomberg Hub, or in short, B-Hub. It will give you a small pop-up. Sorry, my internet seems to be lagging a bit. Yeah. So you can choose which market that you're working in, or say you are going to work in. For example, we don't support that many of the countries, but let's say China. And if you are interested in equity functions, then these are the Chinese equity functions that you can check on, say, for equity finding. Then here you can find, or equity. Sorry, I don't think it has been set, but yeah. Or great. So now it gives you Chinese market specific, and for Greater China equity market news, these are the headlines, and you can just click on it to see the Chinese IPO or Chinese equity research and etc. Or equity market news, or how to generate idea, how to see the economics, and these are some of the functions that I mentioned today, and portfolio analysis and etc. So B-Hub is a great page. You can just put it on here like this, apart from this terminal, and then see how many, what kind of functions I can use for equity player or fixed income player. And last function that I want to introduce is called user. It is another catalog of functions that you can use for each player types. So for this one, is more of the asset class and the market specific. For example, Chinese fixed income one, how can I say the China bond wrap, or how can I see the dim sum bonds or China offshore bonds? You can see, you can just click into a different portal. But for user, this is for the player type level. So you can say browse, and then say you have a interview coming up for investment banking, for equity capital markets, ECM position internship, or ECM position full-time interview is coming. Then you can just load up equity capital markets and see what kind of functions that ECM people will look at. So say research, or subscribing the news, or top news, or yeah, top is the one that I just showed you previously, or the graph or chart, or global market movers that I showed you previously. These are the functions that ECM people would find this helpful. So you can take a look and see what kind of data they would use for daily basis. And yeah, so this is another great tool to understand the players, like the financial market player types, and also the relevant functions. And yes, I think this is it from my side, and thank you very much for listening so far. Please let me know if you have any questions. Please type in the chat, and I'll be happy to answer on that.
All right, again, thank you so much for Eugene for the wonderful presentation today. Yeah, feel free to raise any question to Eugene, because she will be also staying here for a little longer. And here I would like to have a wrap up today. Let me share the screen. So on top of Eugene's recommendation of the tips on using Bloomberg, actually within Polio library. Sorry about the screen. Okay, yeah, it's more stable right now. In the library, we collaborate with accounting and finance department to create actually 10 little video, tutorial video on how to use Bloomberg. Topic will cover various ranges from looking for equities, economics, bonds, etc. So feel free to get to that tutorial if you need some quick help on using Bloomberg. I will also show you the link in the chat area where you can copy it. Yeah, here you go. You can actually see the hyperlink to that little 10 Bloomberg tutorial. And then at the same time, at the end of the workshop, we will really appreciate if you can give us some feedback about this workshop. So follow the hyperlink, or pull out your phone and scan the QR code, and then you should be able to get to the evaluation form. So again, I will copy that link at the chat area, so that you can also go directly from there and then give us the feedback as well. So I guess that pretty much about today's section. And again, if you have any question, stay behind. And if not, then that would conclude today's section. And again, my big thank you to Eugene again for coming. And if you are interested to learn more about the Bloomberg equity research, then feel free to join our section on this Friday as well. So yeah, thank you so much for coming.